Some people can come in, they open up a bank account and they get a checking account, they get a debit card, they do all those things. But other people come to a bank, they want to buy a car on Craigslist, and the seller wants a cashier's check. They don't want a personal check. And this person may not even have a checking account. They have to go to the bank, they hand over $10,000, and they get a check from the bank so that the seller feels confident, oh, this check isn't going to be bounced because it's issued by a licensed national bank. I'll take that. And therefore, that transaction can happen without cash. The seller's happy. The buyer gets their car. And so that product and that situation, that's not a formal banking relationship. And that just has a lot of utility in our society. So it's the same thing with USBC. Some people will use USBC just the way they use their money in a bank account. Even then, it's not a formal banking relationship, even though they're using it to displace a case that you might do with a formal banking relationship, like pay your electric bill. But there'll be other people that they just, for instance, they don't have a driver's license and they want to take the ferry. We do better than that. It's not a full banking relationship, but either way, it's money that's at a bank. In our case, there's no intermediary in between it. There's no green dot. We just will issue this directly. Or developers can build their website, their application, their marketplace right on top of this. They don't have to worry about the compliance and customer information details.
So one of the themes that you've been talking about, Greg, is this distinction between formal and informal banking relationships. What do you mean by that?
Well, from a regulatory point of view, there's a much higher standard of information collection for what's called a formal bank account. And that usually requires a government ID, a whole bunch of checks, et cetera, whatnot. And what that's done is divided the world into haves and have-nots. So people that don't have those are excluded from the formal banking system because they don't have the information requirements. There's a whole other world out there that people still use financial services, but there are things like prepaid cards, gift cards, money orders, and they're still issued by banks. The money still sits at a bank. It's still FDIC insured, but the relationship is more informal. It doesn't necessarily mean the bank doesn't know anything about the customer, but it's not at the level. And the question is there one financial instrument that can work both for the formal population and use cases, but also the informal? We think there is. It's called USBC. It's a deposit token. It has the technology of a stablecoin, but it has many of the information characteristics for compliance that are associated with more traditional bank products. And I think what we'd like to talk about is why one single product, USBC, can work both for use cases that are people that are getting on the first rung of the financial ladder, and also for people that are very sophisticated, very large, on the traditional side of banking that includes correspondent banking and sending large amounts of money between countries for supply chain, et cetera. It can all be one token, but it operates on a sliding scale, and that's USBC, and it can do it compliantly and with good consumer protections.
And I think one of the things that the rise of digital assets, blockchain, and really the hot topic of the year, stablecoins, has illustrated is really the need for innovation in the traditional banking system. And it sounds like you're saying the perfect outlet for that is through this informal banking relationship, in some ways digitizing it, making it more global, allowing these services to scale at a more universal sort of reach. And to your point, potentially addressing some of these issues that we've long had with things like financial inclusion. Does that sound right?
It does. I mean, look, I'll just make it really practical. Some people can come in, they open up a bank account and they get a checking account, they get a debit card, they do all those things. But other people come to a bank, they want to buy a car on Craigslist, and the seller wants a cashier's check. They don't want a personal check. And this person may not even have a checking account. They have to go to the bank, they hand over $10,000, and they get a check from the bank so that the seller feels confident, oh, this check isn't going to be bounced because it's issued by a licensed national bank. I'll take that. And therefore, that transaction can happen without cash. The seller's happy. The buyer gets their car. And so that product and that situation, that's not a formal banking relationship. That person just walked in and got that money order. They might have gotten like, look, here's a little traveler's check. You could walk in, hand over cash, get a bunch of these traveler's checks. They're still tied back to your identity. But like once they're signed, the merchant can move them around like they're like $100 bill. The bank that issued that traveler's check, again, that's a customer of the bank. It's a user of the bank, but it's not a formal banking relationship. And so when you think of a product like USBC, it's like a digital equivalent of this traveler's check that can be, handed to a merchant or sent person to person anywhere around the world. And so it means that we are supporting an informal bank product. It still has an account number. It's still a bank, but just because something is issued by a bank and it has an account number issued from a bank, it doesn't mean it's a bank account. It could be a deposit account issued from a bank. Just like there's an account number on this traveler's check, but it's not a bank account. And so people get caught up in that, and then they confuse the compliance details with a formal relationship with those of an informal relationship. Companies like Western Union and MoneyGram, they don't have this confusion. Or like Green Dot that does prepaid cards. Those are all folks that deal very heavily in money that ultimately sits at a bank, but is issued by companies that are not a bank in a relationship with customers that need financial services. And so we have an element, a product here, USBC, that's very good for those purposes, as well as competing with a lot of use cases that people have used traditional bank accounts for. So it's a great sliding instrument that works across the whole spectrum of financial needs of the users.
If USBC is this sort of sliding instrument, it serves the entire spectrum, both informal and formal. Can you paint a picture or maybe walk us through the flow of how a user might experience USBC through the informal part of the spectrum?
Think about like in the days of like, I'll just use Venmo as an example. If you were a babysitter, you could get paid by someone and they would just send you some Venmo. And you say, well, what can I do with Venmo? I have this money in my account. You'd be able to cash it out, but you'd have to then go and provide more details, enough so that Venmo would let you then send it to another bank account of yours. So there's no problem with people having a bunch of Venmo that wasn't attached to anything. They had a much lower level. And so how formal of a relationship was that? Well, that wasn't a formal bank account kind of relationship. And yet the person who sent that money might have had a formal bank account relationship and funded their Venmo card from it. So it was a great mixing pot between people that had maybe higher level of bank account relationships and those had lower. And that just has a lot of utility in our society. So it's the same thing with USBC. Some people will use USBC just the way they use their money in a bank account. But even then, it's not a formal banking relationship, even though they're using it to displace a case that you might do with a formal banking relationship, like pay your electric bill. But there'll be other people that they just, for instance, they don't have a driver's license and they want to take the ferry. And like in our society today, they can go get a transit card, a Clipper card, and ride on the ferry, and they didn't have to provide any identity information. We're somewhere in between. We have more information than people who got a Clipper card and just put a bunch of $50 bills or $20 bills into a machine, or people who bought a Visa card off the rack at 7-Eleven. We do better than that. It's not a full banking relationship, but either way, it's money that's at a bank. In our case, there's no intermediary in between it. There's no Green Dot. We just will issue this directly. Or developers can build their website, their application, their marketplace right on top of this. They don't have to worry about the compliance and customer information details. We will. And we'll set a very light level for folks that are only going to have like $50 or maybe $500. But as it gets higher and higher, if you want those limits, then you do things that look more and more like the formal banking system. But we will definitely have an on-ramp for people that are challenged in that regard, or just people that want to save time and they're doing something that isn't a lot of money and therefore it isn't that risky. So we will have a risk-based system for how much compliance information, how much fraud prevention information you need to have, based on the size, the complexity, and the risk of what you're doing.
So it sounds like what you're saying is that historically, we've had a lot of innovation, above the banking layer, whether through fintechs or, blockchain firms. But ultimately, if you want your money at the bank, you still have to go through this withdrawal process. You're saying with USBC, your money is always in the same place, whether banking or on the blockchain, starting from day one.
With USBC, it's always on this one ledger. And look, there's going to be bad actors on the ledger, but they're not going to last very long. People will complain. That account will get shut down. And you can say, well, they can come back under a different name. But people aren't going to place a lot of trust in a name that's only existed for like a couple of days or weeks. So the length and the depth of reviews, et cetera, whatnot, it's a trust-based system. And in this system, yeah, you can be a bad actor, you can lie, but people are going to see that your identity is very green, if you will. And by green, I mean very new. And once you get a good identity, you're going to do everything you possibly can to protect your reputation, because once you have a trusted name, you're not going to be the person that's going to use that to commit fraud or do abusive things, because you don't want to lose and be forced to start all over. And so as an ethical platform, it may not seem very aspirational, but in our system, it's easier to be good than to be bad, because you don't want to basically bust up your reputation. And so, in a world where there's blockchain, some AI, and identity, if you're doing bad stuff, you're going to get caught, busted, and set back to ground zero. And, you don't want to live your whole life at ground zero. You want to build trust, because trust is a great accelerant. It's a great lubricant. And this system, just because of that indelibility of the blockchain and the improvements in AI and the fact that we attach identity to everything in a privacy-preserving way, it's an ethically compelling situation to be good, not because we're like shaming people from being bad. It's just that it's easier to be good than bad in our system.
And so if there is so much promise for, let's say these informal banking relationships, and if there is, such a huge market potential as well, why do you think banks really haven't moved on this yet? Or maybe put it another way, why is USBC so well positioned?
Well, banks are still saddled with systems that were developed 50 years ago. So they don't have a cheap way to do real-time payments processing. ACH is cheap, but it's batch. And there are a bunch of things that you want to do that really are much easier if you do it in real time and you don't have delays. And wire transfers are extremely expensive, both, what you have to pay the Fed to do them and all the compliance checks, because if they make a mistake, you can't get the money back. So what made us a leader 50 years ago now makes us a laggard in that system. But blockchain, that's new, and these other digital ledgers. And so, it's just faster, cheaper. And that's not what the traditional banking system has been built on. And, we're stuck with it unless we make that leap. And so what USBC is it's a mixture of the old and the new. You still have a bank account number in the old system. So for the things that you still do there and you have to do there, it's there. But it also has an address in the new. And so instead of forcing people to pick and choose between one or the other, we just say, it's like that Reese's peanut butter ad, we got peanut butter in my chocolate. It says, no, you got chocolate in my peanut butter. We're both, right? And so you don't have to choose. And that allows a migration path between the old and the new. And you can kind of benefit from the strengths and benefits of each without having to give up, the protections of the other.
And really one of the key insights, that you had that really helps drive this innovation is this convergence of digital identity and blockchain. Do you want to talk a little bit about that approach to identity?
Well, it's kind of an old-fashioned concept. Like the great innovation of blockchain really under Bitcoin and Satoshi was that it was trustless. You could be sure that you were sending from A to B. It was just from one number to another. And you didn't have to trust a third-party operator to be the go-between to make that happen. It allowed things to happen directly, bilaterally. Now, the problem with that is that authentication is a technical process. And you don't have any way of knowing like whether the person who's sending the money has a gun to their head and is being forced to do it. There's all these things that can happen at kind of a Mad Max level, but we don't live in a Mad Max world. We still live in a world where there's laws and things to be done if something is done by mistake, how to reverse it and whatnot. So you need a way to have a system that has those protections, those consumer protections built in. And, in the old days of when everybody lived in a tribe, if a mistake was made, people would just say, I trust you, let's reverse it. But in the global world today, when mistakes are made and the money's sent to a wrong account or it's stolen, we don't always have a way of like going to that other country and forcing them to give it back. All these scams, these phishing scams where people are robbing money and taking it to other countries. But in our world, because everything's on one ledger and it's all basically within one bank or one consortium of banks. It's like we're operating at the tribal level, but at global scale. And so when there's bad actors, even though the tribe is very big, the penalties are right there. You're going to get booted and knocked back down to like zero. And so we have an ability to go back and build trust that normally used to manifest itself in small tribes like in Africa where everybody knew each other, but we're able to do trust at a global scale. And so while blockchain and Satoshi and Bitcoin was great for the trustless world, at the end of the day, there's still a lot of value in having money move between two trusted parties. And when you bring identity in, and you know you're sending money to the same person you've just been chatting with or you've been chatting with for years, you don't have to worry about fat fingering an account number and having it go off into a black hole, because you're going to move money between the same sender and receiver and identifier that you do for messaging. And so you build the financial rails on the back of something we all know how to do, which is message from one another. So when you're messaging someone who's in your contact list, you don't have to worry whether you put the wrong number in, copying it from like the bottom of the check. Just send it to the same person you sent that last video, that last text, that last song to, and money will follow those same rails. And that's a system we already all use because we all know how to do text messaging. We all know how to use our phones to phone one another. We're just going to make money follow the same rails that we use for communication. The internet figured it out for communication 20 years ago. We're just catching up now with money.
As you mentioned, it seems unlikely, at least, that traditional banks are going to sort of go after this segment. Like you said, they're sort of bogged down by legacy systems. By nature, they're relatively risk-averse institutions. We are seeing some of these digital asset companies, like Circle, for instance. They're very interested in pursuing potentially a bank charter. Do you see maybe digital assets or other sort of stablecoin players moving into the space in a similar way, or at least a competitive way?
Well, with the new Genius Act stablecoin legislation passing, there's going to be a lot more licensed stablecoin activity. And look, the divide is between those actors that do things with identity, and a bank is always supposedly doing things with identity, and those that don't. And whether those that don't do it are able to because they were like in a money transmission business and they had thresholds that if you were below this threshold, you could get away with no identity. Or now it's stable coins, where there's a whole new category of products, which is digital tokens that are allowed to move around without identity. You basically have a world that operates totally in the green, has to always be compliant for every transaction, and another world where they've been basically given a hall pass. They might be green on one side, they might be green on both sides, or they might be like anonymous on both sides. And so some of the digital wallet technology and certainly stablecoins operate in that world that's either partially gray or fully gray. And look, our society can make a decision to do that. I actually support the stablecoin legislation, but let's not have any illusion about what's going on if you're a guy who wants to like hide what you're doing, either from the tax authorities or people with guns and badges, or you're funding something that could make a bomb go off. Of course, you're not going to want to be caught in a formal system where everything you do is recorded, basically looked at by AI, and has your identity on it so people know which door to knock on when something awful happens. And so they'll go to the world where there's like very little controls about that. And I understand for privacy preserving reasons why we want to have a playground of the world where not everything is scrutinized by Big Brother. But you just have to decide how much of your economy and how much of human activity do you want to have in the sort of in the back alley, the black market. And I'm not trying to eliminate that, but you just have to think, if you look at successful and less successful countries, which are the ones that operate with huge black markets versus ones that don't. And I would suggest that our model going forward for this country should look more like countries that have very little corruption in them, countries like New Zealand or Singapore, rather than countries that look more like, I don't mean to pick on Indonesia, I work there, like Indonesia or like Argentina, right? Like, I think we should basically be pursuing a path that is greener, for a better word, than one that's grayer. But that's my personal opinion. Some people are fine operating in a world where a large amount of activity is basically underground, because because of the type of governance system they live under. The U.S. is kind of like at the crossroads, and I hope we go in the direction of greater compliance while also having great access. It's one thing to say, we're very compliant, but we excluded 30 or 40% of the population because they can't meet the compliance standard. I would like there to be high access and high compliance. And I don't know how to do that without identity, blockchain, and some pretty good artificial intelligence.
I think to your point, the bar for the formal system is so high. We have billions of people who are sort of locked out of it. Historically in technology, we've seen that, when there isn't a good product on the market, then people will go to the black market, right, for music or file sharing. But now that there's Spotify and, people are willing to be green, as you would say. And for me, I think that's hugely exciting. Greg, do you have any final thoughts?
Well, it's just... I have a view of human nature that people are pretty good. But if you raise obstacles, let me just give an example. I talked in another podcast about these intolerable acts and how when Americans were taxed and they didn't have any say about it, they led to a revolution. Now the interesting thing, part of the intolerable acts was there was a tax on rum. And people say, well, people thought it was intolerable. And I said, intolerable because they raised the tax. Well, actually, the intolerable part wasn't that they raised the tax. They actually lowered the tax. You might say, why would people rebel against a tax that was lowered? When a tax is low enough, instead of trying to be a smuggler and go around and not pay it, you finally say, it's not that high of a tax. I guess I should pay it because it's easier to pay it than to smuggle. So the intolerable acts included actually a reduction in some taxes, and it made it easier to pay. It's just that people were pissed off that they didn't have any say in it. They just wanted representation. And so you want to build a system where people actually try to follow the rules, or you build a system where everybody but some chump says, look, the rules don't make any sense. So of course I'm going to smuggle, you're going to smuggle, we're all going to cheat. And once you go down that system, there are very few Boy Scouts out there and very few Girl Scouts. Everybody else becomes a hustler. And I'm not against hustlers, but what do you want your overall society to look like? And I'd like to think that with the right incentives and the right controls and the right governance, we'd be okay to actually follow the rules. I don't mean to sound like somebody who aggressively wants to break the rules, but if the rules are stupid and they don't make sense and they aren't fair, don't be surprised that people will become cynical and they'll start to live in that alternate reality. And again, the U.S. is at a point where we can be a leader in the world of showing how you can actually succeed by being within the rules, by basically drawing within the lines, or you could say, well, look, there's no way to succeed in our society unless you're a rule breaker. I don't want to be that rule breaker, but if you push me hard enough, I'll be out there innovating. And, sometimes you'll see us in court. We want to change the system so it works and there's innovation while still basically operating within the law and being compliant. So I'm still an optimist. I still think we can do it. The jury's still out. There's a new big bill coming through, a couple of provisions in that are really going to encourage people to go to the dark side. But, it hasn't passed yet. So let's see what happens.
At the end of the day, most people are just looking for a fair shake.
Fair is fair.
Thanks a lot, Greg. We'll see you on the next one.